Good morning, ladies and gentlemen, and welcome to the show. Today is January 13th. It's a Monday and of 2020. Listen, thank you guys for tuning in. And let's get started. Let's open up the charts right here. Here's the thing. When I was a young fella down in Florida, I lived in Florida, we had a garden in the backyard. It's a fairly big garden, and I used to water that garden. Anyway, we got this drought. We used to get droughts down in Florida, and we used to get brush fires, something similar to what they're having in Australia. And anyway, a drought came. Really bad drought. It's hot and dry down there. And I was watering the garden when I was a kid. But what I didn't know is that water was only going down about an inch deep into the soil. Water the garden and water the surface wasn't getting down deep into the roots. The ground was actually drying out from underneath where I couldn't see it. I thought I was doing a pretty good job watering the garden. The same thing is happening with the Federal Reserve. What's happening is there's a separation now between the two economies, become two economies, Wall Street and Main Street. And the action that gives money or liquidity to Main Street is the banking systems. Through fractional reserve lending, they lend money out. And that's what gives water, basically, to Main Street. Whereas Wall Street, they get the cheap, easy money, low interest rates. Now, the problem lies in it's almost like the hose is kinked for getting money to Main Street. Because the people now are getting tapped out. They can't afford to take on any more loans or any more debt. They've already taken out, they've maxed their credit cards, and even their credit card scores or their credit ratings is going down because they times are getting harder for Main Street. It's almost like that hose is kinked and the water is not making its way and it's drying out from underneath. It's the same thing as a garden. And if a person takes out a personal loan from a bank, even if you got a good credit score, you're lucky if you can get 7 or 8%. Generally, it's higher, And whereas on Wall Street, they're getting free money, 0% interest rates. And so what's happening is there's becoming a polarization here between Wall Street and the people that live on Main Street. Is the rich are getting richer and the poor are getting poorer. And what's driving the economy, what should be driving the economy, is the Main Street economy, the overall general economy. Downturns, when they do come, they come suddenly out of nowhere. Stock market can crash off. The economy can suddenly take a downturn into a recession. It happens quick when it happens. But what leads up to it is the same thing as that garden starting to dry out from underneath, and you can't see what's going on in the roots of those plants. It looks like the surface water hits the surface, and you think, hey, the garden's well watered. But the truth is it's actually drying out, and you don't really see it until all of a sudden you come out one morning, and the plants are all wilted because they got no water. That's the way with the Main Street economy. It's going to happen suddenly, a sudden shift downwards. And because that hose is basically kinked, the money is not getting out into the general economy, the Fed is going to be pressured to do something. Yes, they are supporting the credit markets. They're going to continue to support the credit markets because if the credit market's all dried up, everything would come to a stop, a screeching stop. So they're going to continue to support the credit markets. But the problem is the money is not leaking out into Main Street. The Main Street economy is not getting any money. They're going to have to do something about that, and they're going to have to do it suddenly at a certain point in time. I can't tell you exactly when. Enough talk. Let's get looking at the silver price today and see what it's doing. It's hard to find assets that are not connected to the dollar and have no counterparty risk. Silver is one of those assets, and so is gold. But the prices still actually remain low. Anything around $18 for silver, I consider that to be a suppressed price, a bear market price. You know, we haven't seen the bull market yet in gold and silver, guys. And a lot of these people are out there saying, should I buy gold and silver? Maybe I've missed the boat. Maybe the bull market's over. It hasn't started yet. Quite seriously. So we're looking at $18 silver. Gold is 15.54. And it's having trouble trying to hang on to the 15.50 mark. It's a very important mark. But, this bull market hasn't really heated up yet. It hasn't really started yet for gold and silver. Let's take a look at cryptocurrencies today. And cryptocurrency has been catching a bid, but today it's not going anywhere. It's ranging around somewhere around between 215 and 218 billion for the industry. Right now it's at 216.4 with a Bitcoin price of 81.20. Ethereum's 143, XRP's 21 cents, Bitcoin Cash is 264, and we're looking at Litecoin at 49.19. Bitcoin SV is 162. EOS is $3.09. Binance Coin is $15.12, and Monero is $57.22. So that's your top cryptocurrencies for the day. Let's take a look at the Dow Jones right now. And it looks like we're up 16 points on the day. Just look at this rally. Focus in on it. Look at it. 28,840. We're headed for 30,000 on the Dow. Look at this rally. It's never ending. Up, 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 up. With the Main Street economy getting ready to turn over. Well, nothing goes up forever. Nothing goes up in a straight line forever. And that's what the Dow's been doing. It's actually an incredible run. An incredible run. Let's take a look now at crude oil. Crude oil's dropping off. It's off 18 cents today, 58.86. Not like the highs it was when when the war clouds were looming, and we made it up to $63. Now it's 58.86, and the price is dropping. I'll tell you what, they're not going to allow this to continue. Don't ask me what they're going to do to stop it from dropping in price, but they're not going to allow it to drop in price because it's an oil-based economy. Oil runs everything, and the oil price, if it drops too low, that's very deflationary. Okay, let's move on now to U.S. Treasuries and take a look at what's going on there today. What we're seeing in Treasuries today is rising Treasury yields all the way across the board, but it's not big. The largest rise in yields is 2.3 basis points. We're looking at a 30-year at 2.3, a 10-year at 1.84, a 7-year at 1.76, 5-year at 1.65, and all four of those is getting a rising yield, rising the most on the long end of the yield curve. Let's take a look at the dollar index today and see what it's doing. 97.45. Now, I've explained to you guys, this dollar, it can actually go up. What's wrong with my page here? I've lost my dollar index. 504 gateway bad. Okay. Anyway, listen. Turn the charts off. The dollar index can actually rise while inflation is actually going up and you're seeing your dollar depreciate in value. And we've actually been seeing this effect happen for quite a long time now. It's nothing new. Listen, thank you guys for listening to this report. Like and subscribe. Give me a thumbs up. We'll catch you guys in the very next show. Bye-bye, guys.